Hello and welcome to the April episode of First Look ETF. I'm Stephanie Stanton with ETF Guide. It is great to have you with us. Coming up on today's show, we will examine a pair of actively managed ETFs with a unique value strategy. Plus, we'll also profile an ETF that aims to hedge against stock market risk and take advantage of rising volatility. And finally, we will tell you about a new Bitcoin ETF that uses a trend strategy with the goal of navigating bumpy rides. But first, to kick things off, as we always do, we have Douglas Yones, head of ETFs from the NYSE. And Douglas, it is great to see you again. Let's dive right into the latest ETF launch activity.
Hi, Stephanie. It's great to be back. And we're entering April, but March was, what do we always say? In like a lion. And guess what? It was out like a lion of ETFs too. Very busy month for ETFs. 52 new ETFs launched last month, raising almost $3 billion in new assets under management. That takes this industry now, we're getting closer and closer to the 9 trillion mark with over 3,400 ETFs. So we're growing.
Yeah, indeed. Growing is an understatement. Earlier this year, Douglas, we saw the launch of the spot Bitcoin ETFs, actually a few of them. How have these ETFs been received by investors so far?
Yeah, look, talk about a market that's continued to get headlines, get eyeballs, and frankly, get assets. You know, spot ETFs, they've done pretty well gathering assets. As they become a little bit more widely used as an alternative to either holding physical Bitcoin as well as some of the futures ETFs, although we have seen futures Bitcoin ETFs continue to soar as well. But there's about $58 billion now held in spot Bitcoin ETFs. What I find is not just the interesting stories that happen around digital assets in general, but even more so some of the unique things people are doing with it, which you're going to talk about in today's show. So tune in. It's going to be really interesting.
Yeah, everyone's going to want to definitely stick around for that. Before we let you go, Douglas, what other ETF trends are you guys watching right now?
Yeah, look, I mean, as much as cryptocurrencies and all that gets headlines, the reality is the growth of the traditional investing is really what is driving our markets. If we, this show, we've continued to track mutual fund ETF conversions. That's staying hot this year. We've had 5 ETFs already convert over $1 billion this year, directly from mutual funds straight into ETFs. Active ETFs, we're going to talk about that on today's show. That trend continues. About 2/3 of all ETFs that are launched this year are actively managed. It is what people are looking for, and we're seeing it. About $10 billion in net cash flow has gone directly into active ETFs this year. And listen, the Fed headlines, inflation, their headlines, fixed income is real. And cash flow has stayed strong in fixed income. About 25% of all cash flow this year has gone into bond ETFs. And last and always most important is education. That's why we do this show. Please go back and watch some of the recent shows. They're still relevant. And of course, you can go to etfcentral.com, learn more about the certified ETF designation. And listen, if you want to learn more about digital assets, our latest webinar at etfcentral.com is coming up in a couple of weeks. It's all about digital assets. It's all for free, and it's available right on etfcentral.com.
Fantastic. So many great resources for everyone, actually. All right, Douglas, thank you so much. It's great to see you. A busy spring as usual. We'll see you soon. And just a quick reminder that besides YouTube, you can also watch First Look ETF on Apple TV, Amazon Fire, and Roku. We also simulcast First Look ETF on iTunes, Spotify, Amazon Music, and other major podcasting platforms, so don't miss it. Value investing tries to identify companies that are trading at a discount to their intrinsic value. And some of the top all-time investors have made their fortunes with a value approach. Well, the new pair of actively managed ETFs from Miller Value Partners taps into a unique value strategy. And here to explain and share more is Bill Miller IV, Principal and Chief Investment Officer with Miller Value Partners. Hi, Bill. It's great to see you.
Stephanie, thanks for having me.
So before we discuss your firm's newest ETFs, why don't you familiarize our audience with Miller Value Partners' unique investment philosophy as well as your approach?
Well, I think it's important to start with our history when thinking about the firm because that's where our approach comes from. My dad's claim to fame was outperforming the S&P 500 for 15 consecutive years. And he did that by taking big active bets on stocks and defining value in different ways than people had in the past. So instead of just looking at low price to earnings multiples, he would look at addressable markets and potential earnings power 10 years down the road. and make big bets on things that other people may not view as quote unquote value names, but ended up doing really, really well and outperforming the market for a long period of time with that approach. And so we still try and take that approach today. We take concentrated positions exclusively in select securities that we think can outperform the index. So we take a very high level of active share. We invest almost exclusively outside of our indices. And the acronym actually we use today for the firm is FAT, F-A-T. So we are flexible in our view of value and processes. We're not going to be dogmatic and try and do something that's not working. We're aligned with our shareholders more than most any other active manager you can name. And then we are the largest investors in all of our strategies and have a huge amount of money in them. And also the names we buy in our portfolios, we make sure that our management teams are heavily aligned with us as investors, because the principal agent conflict is a real one and incentives drive outcomes. And then the T in FAT stands for transparent. We're going to keep our investors informed of what we're doing on a near live basis and why. So that's the overview of our firm.
Yeah, sounds like a solid philosophy. And of course, it sounds like you learned from one of the best, right? So the Miller Value Partners Leverage ETF, and that ticker symbol MVPL, and the Miller Value Partners Appreciation ETF, MVPA. These are among your firm's latest launches. Both ETFs are actively managed. Give us a breakdown. Tell us more about these individual funds.
Yes, so we wanted competitive products out there to outperform the market. And when you think about how you can outperform the market, there's two ways you can do it. One, you can manage the systematic risk or the broad-based market risk and what your exposure to that is. And two, you can manage the idiosyncratic risk of the holdings. So you weight what you own in a different way than what is in the index. Those are what our two ETFs do. One tries to manage market risk and the other tries to manage idiosyncratic risk by taking aligned bets with equities that we view as undervalued and likely to appreciate over the long term from their starting point. The one we're less well known for is that second one you mentioned, the MVPL, Miller Value Partners Leverage Fund. And the idea there is actually we take a systematic approach to managing risk. And we do that using a first principles approach, in that you want to be long assets that go up over a long period of time. You actually want to borrow money to invest in those things, so long as you can avoid the risk of ruin. And so we think we have a systematic way of using intelligence, data from competitive markets, efficient markets actually, to manage that risk. So the fund goes between two assets, 1 times SPY and 2 times SPY. So you're always long the market. You're either very long the market or you're long the market at all times. And we attempt to manage that risk on behalf of investors by hopefully cutting off the left tail risk.
With that being said, how do you see both of these ETFs being used by investors and financial advisors when you're talking about a diversified portfolio?
I view them as both core positions in the risk bucket designed to outperform the market. At the time we launched MVPA, which is the concentrated idiosyncratic risk, fundamental value-based approach, its fee was lower than 80% of actively managed funds benchmarked against the S&P. So we view it as a really attractive product at an attractive price point, with really strong IP and aligned management team working on your behalf every single day. We also have a lot of money in MVPL, heavily aligned with our shareholders and grinding every day to produce excess returns.
All right. I think that's what investors like to hear. Bill Miller IV, thank you so much for dropping by. It's great to have you.
Thanks so much for having me, Stephanie.
Some investors are looking for ways to hedge against stock market risk. Well, a new ETF from the Opportunistic Trader aims to do just that. And here to discuss the fund's strategy is Larry Benedict, CEO of the Opportunistic Trader. Hi, Larry. It's so nice to see you.
Hi. Thanks so much for having me. I appreciate it.
So your ETF, which is Wizard, WZRD, which I love the name, by the way, it's your firm's latest launch. How does this fund work and what makes it a unique investment opportunity?
Basically, I think we'll touch on the unique investment opportunity first, which would be the fact that anyone would now have access to invest with me. My background is more in the hedge fund space. I ran a hedge fund called Banyan Equity Management for 13 years to high net worth investors with very, very high minimums. And now by launching this ETF, it sort of coincides a little bit with my market newsletter called the Opportunistic Trader. And now everybody, whether you want to invest a few $1,000s to millions of dollars, will now have the ability through WZRD on the New York Stock Exchange to invest in my product and have full liquidity and transparency.
And what was it that made you want to open it up? You were managing the fund of high net worth people. What made you want to open it up to everyday investors?
Well, I thought about 5 years ago, I saw a niche in the market that was sort of not being kept the right way. So I started this market newsletter and to advise to the general public. So there was no way for anyone with less than $1 million investment to get in. And now everybody has the ability to buy it. So I thought it was a unique offering in the marketplace. I don't think really very many people are doing it. I know Bill Ackman has a closed-end fund that now smaller investors can invest in, but I thought this was a really good way to entertain the public.
So tell us a little bit more about some of Wizard's holdings, portfolio weightings. Are there any companies or holdings that investors might recognize?
Sure. So really what we try to do is we try to maneuver in top 50 market cap stocks. So pretty much everyone would recognize our holdings from Microsoft to Apple to NVIDIA, etc. But really what makes this different than pretty much everything out there is we're using more than one strategy and options. Everyone knows about covered call writing. It's been sort of the rage over the last couple of years. But we do that as well as trade option spreads and buy options and do a number of different things. So now when the market looks a little bit different than, a straight up bull market, we could put in strategies inside of Wizard that will take advantage of the market down moves. And what I've been very, very good at over the years with my hedge fund is never having a down year in a down market. So, that's really worked well. So I'm trying to use hedge fund type strategies inside an ETF vehicle.
Yeah, that is impressive. Larry Benedict, the Opportunistic Trader. Love the name, by the way. Thank you so much for joining us here on First Look ETF.
Thanks for having me. Appreciate it.
The global cryptocurrency market size has ballooned to almost $3 trillion, and Bitcoin is a key component. Well, a new Bitcoin ETF from Global X aims to help investors capitalize on this trend. And here to tell us more about it is Pedro Palandrani, VP, Director of Research with Global X ETFs. Hi, Pedro. It's great to have you with us.
Thanks for having me.
So before we discuss your firm's newest Bitcoin ETF, for those who may not know, tell us what exactly is Bitcoin? Why should investors be paying attention to the cryptocurrency market?
Absolutely. Well, in simple terms, Bitcoin is a finite supply asset, right? It really lives in a network of users who essentially agree on the value of Bitcoin as a form of money. And one characteristic that is really critical is that it cannot be controlled or altered by any singular entity, right? So here we're touching on a few different characteristics. Limited supply, which clearly introduces that element of scarcity. Everyone talks about the scarcity of Bitcoin with 21 million Bitcoins. That's going to be kind of the cap on supply. It's still kind of a long way to get there, but that's going to be the number. And also decentralization, right? This is not going to be governed by anyone or any single entity. So clearly, the recent introduction of spot ETFs, Douglas was talking about that at the beginning of the show, have essentially proven that there's significant demand for the asset class, right? And I think that's why investors are really starting to pay attention to the cryptocurrency market, not only Bitcoin as an asset class, but we know that there are many other cryptocurrencies out there, but Bitcoin is clearly the largest one with 50% of the market share of the cryptocurrency universe at about $1.4 trillion.
So the Global X Bitcoin Trend Strategy ETF, and your ticker is BTRN. This is among your firm's latest launches. What makes this fund unique, and tell us how it works?
Yes, if we step back for a second, when we think about how advisors and individuals are thinking about their long-term allocation to Bitcoin, we hear a lot about the 1 to 5% allocation of a portfolio into Bitcoin. But there's always this sense that this is still a fairly volatile asset class, right? It can experience a lot of periods of downtrend. In fact, if we look at the history of Bitcoin price, it does experience several shifts and severe price swings, right? So sometimes there are long periods of distressed price activity, and we all know very, very well that losing money is much more painful than the good feelings when we make money. So we believe that there is a need for advisors to have a risk managed way of investing in Bitcoin. And that's a ETF that we developed, right? The Bitcoin Trend Strategy, ticker BTRN, as you said, Stephanie. We developed that with our partner CoinDesk. And essentially, BTRN is really seeking to develop a momentum signal that shows if the price of Bitcoin is going in an upward direction, in a downward direction, or no direction at all. So having really an understanding of those trends, we're really aiming to provide investors with an allocation strategy that can be invested in Bitcoin, but also in a yield-bearing cash allocation in an unemotional way. So to be more specific, if we look at kind of BTRN under the hood, we'll look at the momentum indicator. We're essentially segregating the price momentum into 5 different stages: uptrend, significant uptrend, neutral, downtrend, or significant downtrend. So clearly, in a significant uptrend, we want to be investing, we want to be fully invested in Bitcoin. But if that trend starts to change, we're going to be decreasing that allocation of Bitcoin and getting that into a yield-bearing, a cash allocation, treasury allocation instrument that it's going to generate some yield as there is some downtrend in the Bitcoin price. So what this does is, instead of having to tell clients that they need to buy and hold Bitcoin, that there is this vehicle that tries to exit Bitcoin, get into cash, get some yield in the meantime, and then move back to Bitcoin when there is an improving trend. So that way, we're removing all of the emotions out of the equation and really seeking to have this risk managed strategy for Bitcoin exposure.
Yeah, it sounds like something that investors would really want to take advantage of, because a lot of people probably are gun shy in investing in Bitcoin because of the volatility. So with that being said, how do you see this fund, BTRN, being deployed by investors and financial advisors as part of an overall portfolio?
I think you're 100% right, Stephanie, right? So even though, again, we've been gaining a lot of adoption of Bitcoin, especially with spot ETFs, again, Douglas talked a little bit about at the beginning of the show, and whether that's, retail investors, home offices, financial advisors, we continue to see a lot of adoption. We also have a lot of volatility, right? So for example, we recently hit all-time high levels in Bitcoin prices, but quickly we saw like a 10% sell-off on the price of Bitcoin. Now we're back at the $70,000 per Bitcoin. So the fear of drawdowns, the fear of volatility is there. So really trying to get exposure to Bitcoin in an intelligent fashion is extremely important. So like I said before, rather than emotionally having to bail out or even having to explain to clients why Bitcoin is having a performance drag in the portfolio, this strategy is really aiming to move into that yield-bearing, safe asset during periods of downtrend. So this essentially can be complementary or supplementary to that 1 to 5% Bitcoin allocation that I mentioned before.
All right. Well, it sounds interesting. Pedro, thank you so much for sharing more about BTRN. It's good to see you.
Thank you so much.
And that does it for today's episode of First Look ETF. If you enjoyed the show, tell us in the comment section below and by hitting the like button. A big thanks to all of our guests, along with Douglas Yones from the New York Stock Exchange. Be sure to check out etfcentral.com to learn more. I'm Stephanie Stanton with ETF Guide. Thanks for watching. We'll see you next time.